Now it is time for a brand new segment, ETF Edge, where we break down the biggest movers in the more than $3 trillion industry of exchange-traded funds. Today, our focus is on energy, the best performing sector in the opening trading sessions of 2019. Who else but Bob Pisani at the New York Stock Exchange with more on that. Hey, Bob.
Hello, Scott. Thanks today. Joining me today, Dave Nadig. He's the managing director at ETF.com. Dave, the energy sector, you just heard from Scott.
Yep.
Best performing sector so far this year, up 6%. What's the right way to play the energy sector using ETFs?
Well, the easy button here is XLE, the Energy Select Sector Spider. It's about $17 billion. Great exposure to 30 core energy names, market cap weighting. That's what most people hit for the easy button on energy.
You know, the problem I have with these market cap weighted is you're buying the biggest names. So the top 10 names in this are 50% of the index. Exxon is 25%. You're essentially buying Exxon in this. There's got to be a better way if you want some broader exposure. There are equal weighted alternatives, aren't there?
Yeah, so the best equal weighted alternative here is RYE, which is the Invesco S&P Energy Sector ETF. It's a little bit more expensive. It's the same core names.
30 stocks.
30 stocks.
Same 30 stocks, but equally weighted.
Equally weighted, so your top 10 exposure is about 35%. It's a lot more broadly exposed. It means that you're going to catch some of that small cap effect.
And now what happens here is what I've noticed is when you get these equal weighted names is when you get a big down market like we had it October, November, December, those small cap names go down even more. So that equal weight will underperform. When you get an up market, it'll outperform. Recently, that has been outperforming that equal weight ETF.
Right, and that tends to be what we see in any equal weighted strategy. That smaller or mid cap exposure tends to give you a little more juice on the upside.
It's an interesting idea, equal weighted index. Essentially, it's an investing strategy, isn't it? Because you're selling your winners after a certain period of time. They reweight after what, every quarter?
It's a quarterly reweight, so you're basically selling some of your winners, investing in some of your laggards. That's a time-honored tradition for a lot of investors.
All right, and very important business, of course, that we're going into. Thanks very much here.